So we're looking at the pound dollar, and I want to show you a couple of trades that we executed today and why the trades set up, how I was trading them. There was a few other things that were pretty interesting as the day was sort of unfolding, and I'll go to the candlestick chart so you can see exactly what I'm doing here. But this is the start. This is the first initial trade that we took at the start of the day, London session, I should say. So this was the breakout here above resistance, and I want to show you what that looked like. So as the morning was unfolding and we were approaching the London session, that candle right there, that low just above the fulcrum point, that's the start of the London session. So it looked like it was going to print a continuation breakout trade. And a continuation breakout trade, there are some videos here in the members area. I'm sorry, the Facebook group. I also have it in the members area. I do teach this strategy. The continuation breakout trade is the first technique that I developed on my own back in 2001. And what I was doing was trying to trade breakouts of consolidation. So I go through the whole history of how I developed the strategy in the membership course, the trading course, and you can see exactly what it is that I'm looking for as far as the confirmation for a breakout, so that it doesn't turn into a head fake, because that happens pretty often, right? That's one of the biggest fears, is that if you get into a trade, when price is taking out the high or the low, could it turn into a head fake and then it'll return back inside a consolidation? So there has to be some filters. There has to be some ways to determine that it's likely to continue in the direction of the breakout. Now, prior to this candle right here, this candle set up at 2 o'clock. That's California time. That's Pacific time. So it's actually 5 a.m. New York time. That's when it started. So it closed at 3. So it closed at 6 a.m. New York time. So again, I'm in California. That's why you're seeing these times reflect Pacific time. Prior to that candle closing, I had a signal on my point and figure. And I'm going to show you the two different targets based on the projected take profit levels with the point and figure. And then I want to show you how the continuation breakout trade gave me an additional source of confirmation with the possibility of trading it a little bit further. So this is the point and figure setup. There's the resistance level right here. And here's as it's pushing through. Let me show you what that looks like. That was the candlestick chart right here. So this is the resistance level, and here's where it's pushing through. Now again, so it gives me an entry. The point and figure gives me an entry to go long at 1.2924. Now again, we don't have a confirmed completed continuation signal candle at the time that this is developing. Price is still open. It's still an open live candle. So I can't determine that this is going to be or print a continuation signal candle until that candle's closed. I always talk about this relative to the time frame you're trading. This is a great tip. You want to wait for the candles to close. So whether you're trading off of a 5-minute candle chart or a 15-minute, whatever time frame, you want to wait for the candles to close. It's going to give you much more confidence and more confirmation when you wait for the candle to close. So again, as I'm in this trade on the point and figure chart, that 1 hour candle was still open, but it still gave me the opportunity to trade this. So again, I want to scale out. Until I know for sure, I want to scale out. Where do I scale out? I scale out at the psychological levels, the 50, the 80, the 00, and then the 20. You how we were able to trade this a little bit higher and why? Because of the continuation breakout trade. So even if you traded it here, there was, I believe, 56 pips from the entry to that target here at 80. It went a little bit higher. I think it went to like 91 up here before this little deeper pullback. So 56 pips isn't a bad trade. Let me go ahead and switch over to the candlestick. And then we had the confirmation that this was a closed, completed, valid continuation breakout trade. Continuation breakout trade. It's going to be a 55 pip take profit every single time I trade it on this pair, the pound dollar. It's a 55 pip profit target when I trade it on the euro dollar, the pound dollar, the dollar yen, the dollar Swiss, the dollar Canadian, and the Australian dollar. When I trade it on the pound yen and the euro yen, they're different targets. Watch the video in the membership course, the online trading course, the Real Deal Traders course. Watch those videos to learn where the expected take profit levels are. I did talk about, and I did post a video here in the Facebook group you can see that when we execute the continuation breakout trade on the pound yen, it's a 250 pip target. And that's from the entry to the final target, not double counting. Remember, I can't stand the double counting idea. So again, it's from the entry to the final target. So in this case, when I wait for that candle to close above resistance, you can see I've stopped everything right there at that candle. That's the signal. That's not the entry, that's the signal. Now, I have 3 indicators that I need confirmation. The first one is the Bollinger Bands. They absolutely have to be separating away from each other on that close completed candle. If they're not, it could lead to a head fake. The next indicator, the CCI, there's no divergence there. There cannot be any divergence in these indicators. So there's no divergence in the CCI, there's no divergence in the MACD histogram. So now it's a matter of what is the entry, right? What is the appropriate entry? And I use a 3 pip entry. Now 3 pip entry means that regardless of the high, so in this case the high was at 49, I have to wait until price takes out the high of that signal candle by 3 pips before I can go long. That's my additional final source of confirmation that price is likely to continue in the direction of the breakout. Sorry about that. Let's go ahead and play this out. So you can see on the next candle, I got my entry. Sometimes with these continuation breakout trades, I don't get the 3 pip entry on the next candle. Sometimes it'll pull back a little bit and retest the level that it broke out of and then bounce. And that could take 2, 3, 4, 5 hours, and then it'll pick up and move back up again. So let's go ahead and roll this out. A few more candles, sorry about that. And then we're going to play this out how it reacted this morning. So at this point, that's the candle that hits my target here at 7, 1.3007. And then we get another candle that does basically the same thing. And here we are at this point. We're done. We're flat with the trade. So the fact that I had this continuation buy signal candle that was confirmed allowed us to hold on to a trade with the point and figure initial setup as it's approaching 80. Well, we already knew when it was approaching 80 that we already had a confirmed continuation breakout trade to the upside. All we had to do was just sit through the retracements, the retests of support, and then the bounce and the move right back up again. That's all we had to do at this point was just wait. So again, this actually hit a target of 1.3007 with an entry of 29.24. So again, if we didn't have the continuation breakout trade, if we didn't have this setup right here, then all we would have done, and all I would have done, is traded it to that psychological level there at 80. So this is a great trade. It's a great opportunity. Now we did a trade here on the euro dollar. The euro dollar, in my opinion, is getting a bit choppy and starting to move quite sideways. I'll show you that on the candlestick chart in a moment here. But this was basically about the same time. Early this morning, there was a breakout. There was a clear level of resistance. You can see it here. We've got that low forming here. So let me review the candle pattern. So here's the euro dollar, and this is the 1 hour time frame. This is that low that I was talking about just before it started to move right back up again. So again, just so that you're aware of the time frame that I'm talking about, let's go ahead and go to that candle. This is the support low right here, and I want to show you what it looked like on the point and figure. So on the point and figure, it looked just like this here. This is the area that we were trading. So let's go to that location. So this is what it looked like at this point. That's the low, and then there was a Tech 1 trade. So the Tech 1 trade is another strategy. I have some videos in the Facebook group that will explain how to trade the Tech 1 trade. And the Tech 1 trade is basically a bounce off of support. There has to be a key level of support. And I'm also using the Bollinger Bands to help me confirm the structure, and then the CCI to identify the divergence. And it has to be a bullish or bearish engulfing candle, or evening star or morning star, depending on which direction you're trading it in. I do teach how to use this Tech 1 trade. The Tech 1 trade is the second technique that I developed after I created and developed the continuation breakout trade back in 2001. So again, I trade the Tech 1 trade off of support or resistance. I don't rely on the Tech 1 trade as much as I used to, because again, it can fail, and you have to have some ability to detect whether or not the trade's going to fail. You have to have some filters. that will help you eliminate and stay away from some of the trades. Part of the filters are going to be the indicators themselves and the way the price structure is setting up around these indicators. For example, and I talk about this in the video, so go ahead and watch the video on the Tech 1 trade, but I'll give you a quick rundown. The Bollinger Bands, you'll notice on this move to the downside, the price, the action, the candles are still closing for the most part below the lower band on this move to the downside. And then you get this sideways consolidation for about 9-10 hours, and then it dips down one more time prior to the London Open, and then it moves right back up again. So you get this dip to the downside, it's bouncing off of support, and you'll notice how these candles and the way that it printed this reversal candle pattern here was all above the lower Bollinger Band. This is a pretty classic reversal pattern here. I learned this from John Bollinger. Trading and using the Bollinger Bands and then looking for divergence with price making new relative lows, but the CCI indicator, my choice is the CCI indicator. That's what I use to identify the divergence. And I've used the CCI since I started trading, so it works for me. You may use a different indicator that would be something that would indicate or show to you something very similar, which is the divergence in price versus the reaction here on the indicator. So this one was a decent opportunity, a Tech 1 trade, and then it starts to move right back up again. So let's go to the point and figure. This is that low and that bounce, that Tech 1 trade right here, and here's my level of resistance. So in a situation like this, if I was watching point and figure, I would continue to watch point and figure and wait for the entry when I can clearly see a level of resistance. There's no mistaking that this is a clear level of resistance. I just needed to wait for the entry. And this would replace me trading that Tech 1 trade, that bullish engulfing candle that printed down there at that support level. This, in my opinion, is a lot more reliable, and I would trust this every single time. So the entry was at 1.1854. Now, again, we're looking at resistance levels on the way back up. We don't know how far it's going to go. And the fact that if we look at this chart and we go to where we are currently, notice how choppy it is. It's not really that clear what's going on here at this point. I mean, I would have to go to a larger time frame to really clean up a lot of what's happening here. But it is choppy. It isn't moving the way the pound dollar was or is. So again, I want to make sure that we've got a high and a low, and we're sort of trading in the middle of that range here. There's that dip and that head fake to the downside. I want to make sure that I scale out. So scaling out, again, as I say all the time, my targets, if I get in at 50 or 54, again, 50 would be a psychological level that I would normally trade to, but we're already in at 54, and we're going to the we're going long. We're going to the upside. So the next target after 50, or the next psychological level, would be the 80, and then the 00, and then of course the 20, and then the 50 all over again. So here in this case, it went as high as 81. So we've locked in profits in this situation. So there are times when you know you need to lock in profits and scale out at the first target and then the second target. And then there are other times when you know you can let the trade run to the second target, which would really be your first target. Why or how would you know that? Well, let's say if it was a breakout. Let's say it was a breakout and there was some real volume behind it. Well, there really wasn't. I mean, there was a breakout here, but we're still trading inside of this range right here, as I showed you on the candlestick chart just a moment ago. We're still trading inside of this overall range, and that is a problem. That's an issue. I can't expect or really look at it as a true breakout that's likely to trend for 55, 80 pips. I've got to be careful. So it could stall at any one of these locations. It's still moving sideways. It's still choppy. I showed you that on the candlestick pattern for the candlestick charts on the euro dollar. So this one paid 25 pips. And the other time that I mentioned, you can hold for the second target, which would really be your first target, is when you have enough experience to be able to read what's going on here. Now, there was data here supporting a possible move back up here to the 1900. But again, the price structure, that's why you want to stop and take a look at the candlestick charts. We're using point and figure, but we want to identify what's really taking place here. Some people will use bar charts with their point and figure. Other people will use candlesticks. It's whatever you're comfortable with. Bar charts are easy to read. So the results so far, this is the pound dollar. This is the first trade that I showed you just a moment ago. Entry of 24, scaling out. This would have resulted in 56 pips if you traded it to the 80 and scaled out. But remember, we had the continuation breakout trade that told us we could trade it to the 3007 level. So if you just traded it to the 00 for an extra 20 pips, you would have ended up with approximately 76 pips. I traded it to the 00. I traded it to the 3007, which was the take profit level for the continuation breakout trade, which was all coming together at the same time that I got this entry here on the point and figure charts. So that resulted in 76 pips for me there. And then the euro dollar breakout here to the upside, just trading it to the first target, and then the whole thing stalled and came right back down. So there was 25 pips here. So the total profitability for the day, 101 pips between these two currencies, the euro dollar and the pound dollar. And now I'm flat. I'm waiting for FOMC to see if it provides some kind of an opportunity for me to trade it there.